Ladies and gentlemen, good day and welcome to Music Broadcast Limited Q2 FY2025 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashit Kokian, CEO from Music Broadcast Limited. Thank you and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to the Q2 FY25 earnings conference call of Music Broadcast Limited. Joining me on the call is Mr. Rajiv Shah from our IR team and our investor relations partner, Strategic Growth Advisors. I am pleased to share our company's financial results for Q2 FY25. These results reflect the dedication and hard work of our team, underscoring our unwavering commitment to driving growth and innovation in a tough media environment. During the quarter, the industry experienced a little slowdown due to a sluggish start in festive demand. However, the industry witnessed a notable recovery in the business in the latter half of the quarter. This quarter, we saw moderate growth with revenue increasing 5% year-on-year to Rs 55 crores. Coming to a sectoral ad spending, we observe a decline in our two major sectors. The real estate sector, which accounts for 17% of the industry, experienced a year-on-year decline of 20%. Similarly, the pharma sector, contributing 11%, saw a decrease of 4%. In contrast, the auto industry sector demonstrated growth, increasing by 11% and accounting for 11% of the industry's volumes. The finance sector, which contributes 9% of the total volume, experienced remarkable growth of 45%. The food and soft drink sector grew marginally by 1%, representing 6% of the industry. Additionally, the jewelry sector saw a significant increase of 30%, contributing 6% of the ad spending. For the half-year revenue increased by 8% year-on-year, reaching to 114 crores, while EBITDA grew by 2%, reaching to 25 crores with a margin of 22%. This quarter, we have implemented a series of strategic initiatives to solidify our position in the radio industry, maintaining a market share of 19%. Our comprehensive omni-channel framework has allowed us to leverage the vast reach of our network, ensuring we deliver maximum value for our clients. Our inventory utilization in S2 stood at 71%, showcasing the efficiency of our operations and our ability to maximize our resources. We are pleased to see that Radio City remains the top choice of advertisers, with 38% of the industry's client base selecting our platform. Additionally, 30% of the newly acquired clients in the radio sector have chosen Radio City for their advertising needs. This achievement highlights the strength of our brand and the effectiveness of our marketing strategies in delivering exceptional value to our clients. A core pillar of our strategy is investing in our digital business, which has strong potential future. The digital segment achieved an impressive 33% year-on-year growth, contributing 11% to our total revenue. At Radio City, we are diving headfirst into the digital era where every tap and swipe unlocks new adventures as the media landscape evolves. We are prioritizing digital channels for content creation, distribution, and engagement. Our ongoing investment in technology keeps us at the forefront of innovation, enabling us to deliver seamless experiences across all platforms. We have made significant progress in digital segment. One of our key achievements is the launch of India's first ever 24/7 video channel, RC Studio, for a radio station on Jio TV, which has significantly expanded our reach and deepened our audience engagement. Additionally, our Milko platform is revolutionizing influencer marketing by leveraging data-driven strategies, allowing for more precise targeting and effective campaigns. Through our Mozart Disco platform, we are expanding the reach of music distribution, now spanning over 100 countries. Through our collaboration with Epidemic Service, we continue to offer hyper-personalized musical tailored solution to our individual taste, enhancing listener experiences. Furthermore, our exclusive partnership with Spotify is steadily growing across 4 states, cementing our influence and footprint in the digital music landscape. At its core, radio is evolving to stay vibrant and relevant, enhancing positive energy to new heights. The beautiful amalgamation of digitalization creates a seamless fusion of traditional radio and digital platforms, driving creativity into a new phase of growth. At Radio City, we are dedicated to creating sustainable value at every stage of our operations. Our comprehensive business model focuses on the delivering benefits to our listeners, partners, and the wider community. Sustainability is central to everything we do. Our mission is to empower brands with innovative media marketing solutions that drive exceptional consumer engagement through cutting-edge technology platforms, effective integrated social media dynamics, and content distribution. As we look to the future, we remain committed to driving sustainable growth and delivering value to our stakeholders. Our focus on innovation and agility will enable us to seize emerging opportunities and effectively navigate the challenges of this dynamic landscape. Now let me take you through the financial highlights for Q2 FY25 and H1 FY25. For the quarter ended, revenue grew by 5% year-on-year, reaching rupees 54.8 crores, while for the half-year revenue increased by 8% year-on-year, totaling to rupees 114.4 crores. For Q2 FY25, EBITDA declined by 21% year-on-year, reaching rupees 9.5 crores with EBITDA margins at 17.4%. For H1 FY25, EBITDA grew by 2% year-on-year, totaling rupees 25.5 crores, while EBITDA margins stood at 22.2%. Adjusted profit after tax, accounting for interest on NCPR RPS, amounting to rupees 2.1 crores, stood at 0.1 crore for the quarter. For the half-year ended, adjusted profit after tax, reflecting interest of NCRPS of 4.2 crores, were rupees 4.8 crores. As of September 30, 2024, our cash reserves stood at rupees 341 crores. Our liquidity position remains robust, providing us with flexibility to capitalize on both current and future potential opportunities. This strong liquidity enables us to navigate market dynamics effectively and pursue strategic initiatives as they arise. With this, I will request the moderator to open up the floor for Q&A. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jigar Shah from Elevate Research. Please go ahead.
Hello, sir. Good afternoon.
Good afternoon.
Yeah, so sir, my first question is, as you mentioned, there is a slowdown in the industry. So can you share something on that front? When will it start to recover?
See, the slowdown, obviously, in my speech also I mentioned, was for the month of July and August. And second half, which is starting September, we are slightly showing recovery. And the start of the quarter for the third quarter looks good. And we hope that the recovery continues from what we saw in the latter half of the second quarter.
Okay, got it, sir. And sir, secondly, can you share any guidance for the full year? What margins should we expect going forward?
See, we have shown a 8% growth for the first half of the year. We believe some of our digital initiatives that we have put in, which last of that got over at the end of the second quarter, will start showing results maybe in the fourth quarter of the year. And as a team, we are pushing that, we chase the double-digit growth for the organization. And if we believe the market shows the improvement that it showed now, then we should be in a position to show that kind of a growth.
Got it, sir. These were my questions. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Akash, an individual investor. Please go ahead.
Hello.
Yes, sir.
Yeah, Akash.
So I wanted to ask, sir, what is the inventory utilization for this quarter?
71%.
Okay, sir. And sir, secondly, what is the effective rate for change in YOY, and if we compare to the pre-COVID level, what is the change, sir?
See, at the pre-COVID level, we are like the industry is still at the 80%, 85% of the pre-COVID levels. And as far as the current yield is concerned, we have grown by about 8% over last quarter of last year, the yield.
Okay, sir. And sir, you mentioned in the PPT that the volume growth is declined by 3%. That is for industry or that is for our company?
Industry. We are also more or less the same. It's for the industry.
Okay, we are also around same, around 3%. Okay, sir. Okay, sir. I'll join the queue for another question if I'll be having.
Yeah, thank you.
Thank you. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask your questions. The next question is from the line of Ravi Shah from Opal Securities. Please go ahead. Mr. Ravi, you may proceed with your question.
Hi, sir. Am I audible now? Sorry, there was some...
You are audible, Ravi.
Yeah. So actually, I just had one question, sir. If you could throw some light on our digital business, like what is our key focus area and what will be our goals for the next 2-3 years within this business? What are we looking forward to?
The next 2 to 3 years, you're saying, right?
Yeah, right.
So, the focus, as you know, that a large part of the component is still radio. And, so our focus on radio and at the listener level, trying to enhance listener, experience is the first thing that we're doing. From an advertising perspective, we are giving newer integrated approach from an advertising for advertisers so that they are able to get a better buck for the investment that they're doing. As far as the window of 3 years is concerned, very clearly, as you know, I've been saying that, as a marketing solutions company, we are actually chasing the consumer journey. And we will, straddle all those places where a consumer can be met and brands can engage those consumers, whether it is on-ground, radio, digital, social media, whichever space consumers are. So our digital foray, largely, which is the digital experience that we are talking from a listener or a viewer now, because we are also a video channel, is clearly keeping in mind that wherever consumers are consuming content, we will either create platforms or we will distribute on those platforms so that consumers will get our content seamlessly. So the 3-year window is to keep rooted with radio because that is still a radio play, and being a large player, there's a substantial revenue coming out of that. Also, with the evolving audience or the consumer, we will also ensure to get a larger share of the digital revenues that happens on social media, through influencer marketing platform, through our distribution platform, and various initiatives that we do on the digital space.
Understood, sir. Thank you for the detailed answer, sir, and all the best.
Thank you so much.
Thank you. Before we taking the next question, we would like to remind participants to press star and 1 to ask your questions. The next question is from the line of Rohit Mehra from SK Securities. Please go ahead.
Yeah. Thank you for the opportunity. My first question is regarding cost. So our employee cost and other expenses have surged by 16% and 12% respectively. Can you throw some light on that?
See, there are 2 reasons for it. One is, of course, last year, in the beginning of the year, as an organization, we've always been prudent of our investments, including people. So when initially, when the market was not really showing that kind of traction, we had kept our headcounts low in spite of the requirements that we had. But as the market opened up, we have started kind of taking up people, and the larger difference that you're seeing is, which I've been telling in the last 2 and 3 investor meet Concalls, is that this whole digital experience that we are creating, which is talking about investments on digital, also comes with investment in people, because those are specialists. For example, when we are creating this 24/7 streaming channel on Jio TV, we need experts who understand what video content is, how video editing can be done, how video conceptualizing. So the large part of so-called increase that you're seeing is largely coming from our digital forays, which is a long-term investment. That is what we are looking at.
Yeah, understood, sir. Okay. And my next question is, what were the advertisement rates during the quarter?
We have increased, I told you, 8% over last year for similar quarter.
Okay, got it. That's it from my side. Thank you and all the best.
Thank you.
Thank you. Participants, to ask your questions, please press star and 1 on your touchtone phone. The next question is from the line of Yug Modi from EP Capital. Please go ahead.
Actually, thank you for this opportunity. Sir, I just had one question. Can you share on the updates on our digital initiative, that is of Jio TV, Music, Disco and Happy Dynamics?
So, Jio TV are currently, we have started monetizing it, because it's just about 3 months since the launch has happened, and, it's taking its own traction. So, indirect revenues are right now coming in, but the larger play is when we, kind of see a larger integrated approach, not just with RC Studio, but across Jio, which is what the talks are happening right now from a digital perspective. As far as Sminfo is concerned, the platform is up and running. We have right now more than 40,000 aggregated influencers in place. On an average, we do about 10 to 15 activities of influencers across the quarter that we have looked at. And, we are looking at incremental revenues coming through influencer marketing through our various efforts that we are putting. So that as far as Music Disco is concerned, that is early days. The product is completely developed, but we are right now in the aggregating mode where, independent artists across the country will come, register, upload their song, which will be then globally distributed. And this is the subscription revenue in whichever global platforms the music gets distributed. There will be a revenue share that happens. But that usually these kind of products has a window period and gestation of about 8 to 9 months at least for people to get used to the product, upload it, and then of course the song becoming famous and so on and so forth. But we have already started our journey as far as music distribution is concerned, and what we are looking at this music distribution platform is not just being an aggregator and a distribution and monetizing it. We also believe that there will be an ecosystem which will help us to, because we create anthems and jingles and all for brands, we'll have a ready depository of artists who we can use to create brand anthems for advertising, which also is another way of monetizing.
So, one more question, sir. What all new cities are you targeting in the phase 3 auction?
Sorry?
Sir, what all new cities are we targeting in the phase 3 auction?
See, right now, a lot depends on how the government responds. So as AROI, which is our industry forum, has already appealed to the government to kind of relook at the licensing fees, because if you know the newer markets, they have agreed to the 4% of the gross revenue as the licensing fee, but the earlier markets, it is either 4% of the gross revenue or 2.5% of the OTF, whichever is higher, which is where the whole bane is right now, So we are pushing, saying that please standardize it, A. B, of course, timelines given is too close to us taking an evaluated call to understand, because some of the markets right now is not even having added data. So we have told the government that we'll have to kind of look at extension of the date. To answer your question, wherever markets where we believe we are present already in the state, those markets will try to deepen. So if there are cities which is there in our states which we are already present, we'll deepen ourselves, or in markets where we are not present but we believe having that presence in that state will increase our ability to market ourselves better from an overall perspective, we will bid for those stations.
Perfect. So that answers all my questions. Thank you, sir.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Akash, an individual investor. Please go ahead.
Hello, thank you for taking my question. Hello, am I audible?
Yeah, you're very much audible. Yeah, Akash, go ahead.
Okay, sir. I wanted to ask, sir, what is the FCT and non-FCT split of our revenue?
See, right now we are almost 65% of the revenue is FCT. The balance is not just non-FCT, it's non-FCT, on-ground non-FCT and digital put together.
Okay, sir. Digital.
And if you see the investor presentation, it's 61-39% if I'm not mistaken.
Okay, sir. And sir, can you tell us about something about the investment in Asminco?
Oh, the investment in Finco, we already said we have, less than 1 crore is what we had invested from a platform development is concerned. And that's a one-time investment. And now whatever happens is all trying to get monies out of the influencers and the integrated brand solutions that we give to clients. So that's how it is.
Okay, right, sir. Okay, sir. Thank you, sir. All the best.
Thank you so much.
That's it.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Vedant Basin from Minerva Asset Management. Please go ahead.
Yeah, hi. Just to follow up on the previous question, the 61 to 39 is the FCT, non-FCT. Can you please shed some light on the 39, how much percentage would be from digital?
I have given. It's 65-35.
Okay, all right. So if you can just tell me out of that 35, how much would be on ground and how much would be digital?
Digital is about 11%, on ground will be approximately 10%, the balance will be NFCT on air, which is the integrated, apart from pure FCT.
Okay, so around 10-10-10 would be the split.
Yeah, we can put it as 10-10-10. Digital has been 11 for the quarter, but yeah, I can average it out as 10-10-10 at this point in time.
Okay, all right. Thank you very much.
Thank you. The next question is from the line of Payal Shah from Billion Securities. Please go ahead.
Good afternoon, sir. Thank you so much for the opportunity. I have 2 questions. First, what is your strategy to counter the competition as this quarter was not good?
So that is, first and foremost, Payal, we don't counter competition on a quarter basis. Our strategic way forward is completely defined by the need of this organization and our investors like you. So to answer your question, we are very clearly focused to the fact that if the consumer who we are trying to aim at is consuming content on radio, is also looking at engagement on ground, or is also looking at some kind of digital interplay, our strategy is completely focused towards that. And hence we stay rooted to our strategy. And I also would urge you all to look at this as an aberration from a performance perspective, because it's an industry reflection than an organizational reflection. And I'm very strongly believing in that, because we've got all our things in place, and we are very sure unless and until the industry really tanks or the environment tanks, we'll have a happy story to talk here on.
Sure, sir. So my next question is, what type of investments are we planning in the digital now?
See, right now what we are doing is our investments is, again, like I said, will be purely manpower, because all we are doing is playing with the intellectual understanding of the various social media spaces that is available for us to monetize, whether it is Instagram or YouTube or Facebook and so on and so forth. And beyond that, our products have already been launched. We have launched Minco, we have launched RC Studio. We've also collaborated with partners who are allowing us play in age cohorts that we are not playing. For example, our collaboration with Voca, which is a children's app, allows us to play between 2 to 12 years, which earlier we could never aim at. But today we can give advertisers who are looking at that age bracket various opportunities. So our strategy is very clear. We will follow the consumer journey, and wherever the consumer wants our content, we will distribute it, we'll create content, and we'll monetize it.
Sure, sir. So I have two more questions, if I may.
Yes.
One being, are we planning to launch our own app like radio app?
See, we are already present. Our website is also fairly developed and it is app enabled, handset enabled. So I don't see any reason to introduce one more app, because if people want our content, it is there in the social media, it's there in the Insta handles that we have got, it is got in the national handles that we have got, and now the website is also handset enabled. So there is no need of an app to be developed.
Sure, sir. So my last question being, just can you please explain what efforts are we making on the tier 2 and tier 3 markets?
See, the tier 2, tier 3 markets, of course, we are doing a lot of digital initiatives in terms of, because what is happening is those markets are still a little laggards from a advertiser digital play is concerned, while the larger consumption of digital is happening. So we are obviously talking to advertisers and agencies and helping them understand that how a radio plus on-ground plus digital will be a far better way to do marketing, rather than taking segmented platforms and not get the kind of advantage of seamlessly talking to the same consumer in the various platforms.
Sure, so that's quite...
And to add, also keeping in mind the needs of the smaller markets, from time to time we create events which helps brands in those markets engage with consumers on ground, and also we create events, marquee events, which helps them to kind of be part of a larger ecosystem when it comes to advertising.
Thank you so much, sir, for the detailed answer. That's it from my side.
Thank you.
Thank you. We would like to remind all the participants that you may please press star and 1 to ask your questions. The next question is from the line of Vedant Basin from Minerva Asset Management. Please go ahead.
Hi, thank you for taking my next question. Since I'm new to the sort of company, I just wanted to understand from you if you can talk me through the monetization on radio versus YouTube versus RC Studios. Like in terms of CPM, if you can just give me like an average on what monetization is like.
CPM cannot be given because each platform has its own currencies to work with, right?
Okay.
I would not know what exactly you want to know, because each engagement, because radio there is investment which is there from our side. On RC Studio, apart from people and our own cost investment, there is no investment on the platform per se. So I don't know what exactly you want. If you can be more specific, then I'll help you understand what your requirement is.
Okay, all right. So I just mean that if there's not one specific figure, if you can just tell me a little bit how monetization works on RC Studios and YouTube. Like, is any one of them better than the other? And how do they compare to YouTube?
Because the fact that, first and foremost, I mean, if I can just give you the reason why, in spite of radio being radio, are we looking at opportunities beyond radio? So like I said, we are following the consumer journey. Now, if you look at Indian advertising, 1,17,000 crores is what the overall Indian advertising is, and radio is about 3,000 odd crores. The rest of the pie is divided between digital, on-ground, and TV, and print for that matter. So when we look at the options that we are talking about, these options which we are talking about are giving you more options beyond the 3,000 plus crores of radio that is there. Hence, your ability to garner more revenues from similar set of brands or clients is where the whole effort is, right? So we will continue to do whatever we need to do. We are at a 19% market share, which is amongst the best, and we are amongst the top 2 players as far as market shares are concerned. But beyond that, if the consumer is spending time beyond radio as a medium, so today time spent is close to about 8.5 hours. Radio time spent is about an hour and 20 minutes, which is what it has been for years. The only thing is that earlier the overall time spent was 3.5 hours. That has become 8.5 hours. So relevance at the overall level, while radio continues to be relevant, but in a relative concept, it's lessened in the overall perspective. Hence the need to go do digital. That's my first point that we're bringing. And each of those initiatives that we're talking about is talking to a segment. So when we're doing RC Studio on JioTV, it is for the streaming platforms that we are talking about. When we do Sminco, there is an entire base of marketeers who are looking at influencers as a way of engaging with their consumers. And that's the segment which is growing rapidly. Hence, we launched our own platform because here it's a completely data-driven platform. We can give analytics of each influencer. So suppose tomorrow a brand in the cosmetic category comes and says that I want to know about these 10 beauty influencers, what is their followers, what is the engagement rate, what kind of content of theirs work. I'm able to, through a data-driven insight, give them those requirements which help brands to understand which influencer to pick up, because then the success ratio is going to be higher. So it's a dynamism of scientific research with data which allows marketers to take a calculated understanding of where to invest, which is also measurable at the end of the day. So that's the best part of being in digital, and that's where we are moving. Wherever the consumer is moving and doing his consuming his content, you'll find us playing a role there, either directly or indirectly through other platforms.
Mm-hmm. Okay, understood. Just a small follow-up question over here. So, in radio versus digital, if I'm just looking at it, in digital, do you see margins as higher, lower, or how do you think it compares to radio?
As I said, apart from the people cost, unlike radio, which is a very highly fixed cost business, which includes a whole lot of things, right from the infra to the transmitters to the operational cost. Digital is a far better bottom line booster than radio.
Okay, all right. If you could just put some numbers to it.
There's no numbers, I can just give you back of the envelope calculation today. We are about 20-22% of margins that we talk about. We would be a 30% plus on digital, which is a good 10, 20, 15% more, and we will continue to be at that percentage.
Right. Okay.
But that percentage, like I said, depending as we move forward, and I've always been saying our journey in digital is exploratory. Yeah, but tomorrow if there is a high intensive capital-based digital opportunity when the world moves, I don't know what it's going to be, then maybe the things will change. But the fact that digital will be part of our fare from an advertiser requirement is concerned, and also the way forward for the organization is something which we are very clear about. So we are playing the role. At this point of time, to answer, the percentage is higher, much higher than radio, for sure.
All right. Understood. Thank you very much. Best of luck.
Thank you. A reminder to all the participants, please press star and 1 to ask your questions. We'll wait for a moment if the question queue assembles. Thank you very much. As there are no further questions, we would like to hand the conference over to Mr. Ashit Kokian for closing comments.
Thank you. We sincerely appreciate your active participation in today's earnings call. As media consumption habits in India continue to evolve, driven by a diverse range of content options, the radio industry has a unique opportunity to integrate digital platforms while keeping radio at its core. Our focus remains on advancing the digital landscape by leveraging our resources and relationships to deliver maximum value to our customers. The presentations, earnings release, and results are all available on the corporate website and stock exchanges. If you have any further queries, please get in touch with any one of us or with Strategic Growth Advisors or Investor Relations Partner. Wishing everyone a very happy festive season. Thank you.
Thank you. On behalf of Music Broadcast Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.